So guess what? The Diamond is back. He's back talking about cautious on everything. Soft landing, not so sure about that. And it's so very interesting that these comments come out after he sold a lot of shares of the JP Morgan stock, about approximately 800,000 plus. I did a video on this yesterday. You could check it out. But it's very interesting that he came out to, after selling his shares, talk about how he's very cautious on the economy going forward. So I'm going to share my screen here and share with you, show you this article that comes out from CNBC. And it's basically titled here, Jamie Dimon is cautious about everything as he sees risks to a soft landing. So here it is. So it starts off saying JP Morgan Chase CEO Jamie Dimon thinks there's a better than even chance that US is heading for recession, though he doesn't see systemic issues looming. Speaking Monday from JP Morgan High Yield and Leveraged Finance Conference in Miami, the head of the largest US bank by assets said markets probably aren't pricing in a strong enough probability that interest rates could stay for longer. It's very interesting. I've been saying this on this channel that it's not surprising. It wouldn't be surprising to see rates be pushed out later this year, or maybe mid this year or later this year, especially if data continues to be stronger than expected. Diamond noted there are things out there which are kind of concerning, and he disagreed with the high level of probability being assigned to the economy missing recession. The market is kind of pricing in a soft landing that may very well happen, he told CNBC, but the market's odds are 70 to 80%. And he said, I'll give you half that, that's all, on a soft landing. The comments come as the markets indeed had to reprice its expectations for monetary policy, like I was talking about, right? The traders are now seeing that easing and rate cuts may not start until June and July. So if you remember, in March, traders were expecting some sort of rate cuts by then, and that was basically thrown out the window. And then traders were expecting May, and now that's being pushed out to now June, July. With 3 cuts now priced in, half of the prior expectations, right? So basically, they were expecting way more rate cuts, the markets, even though the Fed told us they're going to stick with 3, right? Along with elevated rates, markets have to contend with the Federal Reserve rolling off its bond holdings, a process known as quantitative tightening, right? So not only they're cutting rates, they're still tightening the market, still doing QT. While the central bank is expected to start tapering the program soon, it remained another factor in tight monetary policy. It's always a mistake to look at just the year, Diamond said. All these factors we talked about, QT, fiscal spending deficits, geopolitics, those things may play out over multiple years. So basically saying that this recession that everyone is expected to come, we were all looking at it from a 1 year point of view, but that happens to not be so true. So actually, we should be looking at it at multiple years. But they will play out and they will have an effect. And in my mind, I'm just kind of cautious about everything. So there you go. He's telling you he's cautious, he's cautious, he's cautious. He doesn't believe that soft landing is very likely. He also goes to say that he doesn't expect a replay of some of the serious downturns like the US economy faced in 2008, the great financial crisis. Um, However, he does say that the higher interest rates, along with the recession, could hit areas such as commercial real estate and regional banks hard, but with limited macroeconomic impacts. But then, after saying that, that the recession may not be that bad and it may not be like 2008, and he's cautious and blah, 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 he then goes to say if we have a recession, and yes, it will get worse. If we don't have a recession, I think most people will be able to muddle through this. Part of this is just normalization process, rates were so low for so long. If rates go up and we have a recession, there will be real estate problems, and some banks will have much bigger real estate problems than others. So goes on to say, it's going to be limited in terms of macroeconomic impacts, but then says that if we have a recession, things will get worse and certain banks will be hit hard, right? And he used some banks. He didn't specify exactly the regional banks because he says here, as far as regional banks go, he labeled issues that hit institutions such as Silicon Valley Bank and New York Community Bank as idiosyncratic and said private credit could take a hit, but not at a systemic level. So he's kind of balancing here, teeter tottering, balancing effect here, but basically giving you the warning signs, the caution signs. But the biggest telling point is not just his caution sign, and not what he's saying in those words, is his actions, is what he did just recently, which was sell 800, more than 800,000 shares of JP Morgan stock at the highs. And literally, that amounts to, which literally ends up being, the first sale or major sale that he's ever really done. And he's always been a buyer of JP Morgan stock. It was just the first time ever that he did this massive sale. Definitely, if you look at the video I posted yesterday, you will see how great an amazing trader he is when it comes to timing the bottoms, the buying, and now we'll probably see also how he timed this sell off too. I think it has yet to come. We have yet to see the truth behind all of this, but it's just another point here, you know, after him selling a crazy amount of shares, that he's now coming and saying he's cautious, 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 right? But obviously not really going out in public and warning explicitly saying, oh, it's going to be hard and it's going to be like 2008. Just saying, yeah, I'm cautious, but I don't want to create any fear right now because he runs one of the largest banks out there. And if he starts creating fear out there, then definitely it will not be good even for his own bank. So, anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.